Hello everyone and welcome to another video. In this video you will be seeing how to identify a non-trading day. This is on request from one of my students, so obviously currently speaking is Alex, owner of AHFX, aka Posh Spice, as some people do know me, just for a bit of a joke. This was requested from one of my students when he essentially had a couple of good days this week and then had a bit of a bad day and then basically undone all of his good work just on one day. So he essentially asked me, how can I identify a non-trading day? And it's very, very simple, very simple. If you go through these 5 things, in my eyes, this is the way to identify should you be trading or should you not be trading. First off, make sure you're checking the news. This can be stuff like non-farm payroll. It could be a Yellen speech. This is just examples of the last couple of weeks. It could be export numbers. It could be interest rates. So ask yourself, should you be trading around these kind of news events? In my opinion, no, not really. And if you are, maybe use pending orders. I have a certain way I trade because I feel and have a theory and have proved the theory that price is structured in when there's news coming, especially big news like NFP, interest rates. There's usually a big liquidity pools a couple of days before it comes out in the week. So look at the daily time frame and higher time frame to find these kind of pools to work out where price could go, and then set pending orders accordingly, really. But should you really be trading it? If you're a newbie, I personally wouldn't be trading the news. Second thing to be looking at, check where we are in price structure. Are we in the middle of a price range? Are we consolidating? Are we at resistance? Are we at like a key high level support? Perhaps we're at daily support, daily resistance. Check what is currently happening in price. So if price is in a downtrend and it's making lower lows and lower highs, then yeah, that's absolutely fine. When structure starts to change, don't try and call the bottom or try and call the top. Don't take any trades just because you think you've found the bottom or the top of the market or of the trend and trying to get in the most premium prices possible. The only people that get the best prices are institutions. Generally, traders just piggyback off what they do, me included. So check where you are in price structure. If it's unclear to you where we are in price and what should be happening, and if you look at the market and you can't take a subjective judgment call as to, okay, price is at resistance, also it's at daily resistance, also pre-market's bad, also there's news coming out that should be bad. The currency strength meter tells me that USD is 1 bar and JPY is 5 bars, so okay, maybe it could be confluence for a sell. If you don't have things like that and prices hasn't got the right kind of structure and the market isn't set up, then I wouldn't be trading. And for me, that would be a non-trading afternoon or morning until the market's really set up to be moving and set up to be moving in the direction and in your kind of way that you trade, in your kind of style. Next thing I'd say, you need to be checking the current economic events. So maybe there could be elections, because I know the Japanese election is very soon. Perhaps around the US election, when that happened, when Trump got into power. Perhaps the Canadian interest rate that came out, there was a big hoo-ha about that. There's been a lot of talk about Brexit, etc. Over the last couple of weeks. So you need to factor in and do your research when these things are happening to not get caught short in the market. So, for example, if you're in GBP, JPY longs, and then the Brexit talks start, and then it absolutely flies down because it's a negative thing for the UK in a lot of people's eyes. People are just capitalising on things like that and therefore taking sales on GJ, and you're in longs or buys just because you didn't do your research and you didn't say, oh, well, I forgot about the Brexit talks and I forgot that Theresa May was speaking and I forgot this and I forgot that. Like, don't make excuses. Just do your research and then you won't be caught short. For me, when there's talks of Brexit, etc., if I'm looking at GJ, one thing I would stay out of. Because as soon as you understand what's going on, you can just follow the trend, and you can follow like the breakout of the news or the actual speech, depending on what it is. So, for example, last week, like I piggybacked off the back of GBP news, I think it was, or it might have been USD news. But I waited for the move to happen, waited for like a liquidity pullback up, and then just took sells or took buys. I can't remember what it was, but I did that last week just because I know if I'm going to be trading on that day, I need to like wait my turn and wait for the actual big move and just piggyback off the littler moves. Next thing to talk about, check what day of the week it is. I posted about this on Instagram this morning and tagged one of my students who did about 25% this week of his account. Great gain, a lot more than a lot of people do in a week / month. So, hats off to him. He's done very well. But what did I say to him on Thursday night? So last night, because I'm obviously filming this on Friday. I said to him, what day is it tomorrow? And he said to me, Friday. And I replied to him saying, what do I say about Fridays? Because I preach it so much, he knows what I'm going to say to him before I say it. I say to him, if you've done your goal before Friday, 1, reduce your lot size times 5. So trade like a fraction of what you would trade. So if you want to trade and you've got the bug and you've got the itch, then if you take losses, there'll be 5 times less than it would usually. So it's not going to damage your progress for the week. Or, like I actually did say to him on the screenshot I posted on Instagram, I don't want to see you in the groups tomorrow. I don't want to see you talking about charts. I don't want to see your analysis. I don't want to see your MetaTrader window open. I essentially want you to close that, save your credentials, and log out, delete the app. I don't know, delete it off your computer. Do whatever you have to do to remove temptation to trade again. The point that I try and make to everyone is you don't have to trade every single day. Not every day is a trading day. For me, Fridays aren't trading days. I traded a little bit this morning on GBP JPY breakout. Took the most killer entries, grabbed the retest. I think I was in like a 1 pip of or 2 pip of drawdown. And to be honest, GJ is not really my pair, but I just visualized the move, zone to zone, and caught pips. And I was finished by like 9 o'clock or 9:15, 9:30. And that was me. And I've literally just been to the gym, closed MetaTrader, closed my laptop, and I'm forgetting about it. Like, I've made a great gain on a Friday, and generally Fridays are target practice, hence why you reduce your lots. And I think that's something to get over. Like, you don't need to trade every day. If you can do 25% in 4 days, don't chase an extra couple of percent on a Friday. So checking what day of the week it is. Is it a sensible day to be trading? So Monday, in my eyes, not a sensible day to be trading because the market is not set up. The market does not have any structure. On Monday morning, we've had one session, and that one session is Asian session, which is known to be slow anyway. Do you think the market and the institutions have got like their premium prices for the week, for their positions, etc.? It isn't set up for the big moves. The bigger moves happen on like Wednesday and Thursday from journaling and back testing. I take the majority of my trades on a Wednesday because I make the most money on a Wednesday and therefore the most pips on a Wednesday. But only by journaling everything I do and back testing everything I do, I know what my most profitable day is. So on a Monday, if I don't see a setup, I'll say, okay, well, it is what it is. It's Monday and there is no structure. So make sure you're checking the day of the week to identify if it is a non-trading day. And like I've just briefly gone over, check your gains for the week. If you've made a serious gain, so last week I did like 30-something% in 3 days of trading. I didn't trade on Friday really, and I didn't really trade on Thursday. And the reason for that was I overshot massively in the first couple of days of the week than I usually do. I usually go for about 5% a day, and I did like 30% in 3 days. So I've done about 10% each day, or I did a bit more on one day, and I did like 8% on one day and another 10% on another day. It doesn't really matter what the figures were. The point is I made a great gain very quickly. Fridays are known for wildcard moves, so I'm going to write that down so you don't forget that. In my opinion, Fridays are like NFP. I don't trust Fridays. I've been there and done that and got the t-shirt of making a serious gain and giving most of it back by just over trading on a Friday, taking a trade in the morning and saying, oh man, let me just make that back because I had 25%. Now I'm down to 20, so I'll just make that 5% back and then I'll be happy and then I'll leave it. But the market doesn't work like that and it doesn't owe you anything. So it has no sympathy. And if you're over trading and then essentially you take a loss and your state of mind completely changes, you want to kind of chase what you had and that you were happy with. For me, I was pretty happy last week, so I barely traded and I did not trade on Friday because one, it's a wild card. Two, check your gains for the week. 30% gain in like 3 days worth of trading. Nobody does that consistently. Not that many people do it consistently, should I say. Sorry. Institutions definitely don't. And a lot of people that I know generally don't. They do like their 1-2% a day. Some people do more, some people do less. Just worry about what you're doing. And so for me, I was worried about what I was doing. I did my like 30%. A student of mine did like 300%. I was like, oh, great. Rinse and repeat. Next week, do it again. The point is, it's about longevity. And if you can do your 20%, 30% a week, trust me, it all adds up. It certainly has for me. So that's the final point. Check your gains for the week. Make sure, if you're happy, you don't have to trade again. Trust me, there's going to be so many more setups next week that are probably going to be so much better than the markets today. I said this in the Telegram group that I run for free. I do about half an hour question and answer every day. And I basically said, guys, why are you trading? It's Friday. If you have to trade today, you've already missed the best moves this week. The best moves this week, in my opinion, were yesterday and Wednesday. So I don't know why you're forcing trades, forcing 5-10 pips. Just go and take an early shower, go and have an early weekend, have a lunchtime beer. I don't know what you want to do. All I would say to you is don't give back what you've already made. And I know people are prone to this. They're profitable, but they're not consistent because they make a profit and they give it back. So there is a difference between being profitable and being consistent. With this in mind, this is me signing out for the weekend. So I hope you guys all have a great weekend. I'm also running a webinar on Sunday, so make sure you come and check that out. Links in my Instagram bio. I am personally not doing a lot. I'm just chilling out. But whatever you guys are doing over the weekend, make sure you enjoy yourselves and come back refreshed for next week's markets. Peace out from me, and I will catch up with you guys soon.